Good morning, everybody, and I welcome on behalf of ICI on the webinar on digital sustainability reporting. This program is webinar is scheduled for 2 hours, and we are lucky enough to have with us the dignitaries and the galaxy of the star speakers in this seminar, including but not limited to CA Dr. Sanjeev Kumar Singhal ji. Then we have Revati Raman, then CA Raj Malik, CA Madhu Matthew, and CA Vivek Ved. They'll be dwelling upon the nitty-gritty of the XBRL. Yes, sir, XBRL, digitalization of the sustainability reporting. But let me introduce first our chairman of the sustainability reporting and the standard board, none other than CA Dr. Sanjeev Kumar Singhalji. Uh, it's indeed all the more pleasure for me because we are good friends. So Dr. Sanjeev Singhalji is besides CA, is a doctorate, has done PhD in the intermediate finance, faculty management, and certificate course of Indies, and the alumni of the Delhi School of Economics and the Sri Ram College of Commerce. He won about more than 100 in the merit certificates and authored more than a dozen books, 14 books he has authored. A big kudos to you, Dr. Z. And besides being this achievement, I'm going to narrate something else, but I won't like to touch upon his humanity side. During COVID 19, he's played a very vital role in Delhi, in and around Delhi, and he has accepted the call of of Prime Minister of India and helped many patients with the PP, with the oxygen, with the concentrators, with the ambulances, and whatnot, and supporting more than 100 students in the underprivileged background to CA. So he's not confining himself, but he wants others to also to be a CA and replicate his success. He served in the following capacities: government nominees in the NACAS, the special invitee in the company's auditors Caro Group, members of Security and Exchange Board, and he is also instrumental in the social stock exchange, which is the new dimension coming up in a short while from now. He is member of Niti Aayog, MCA, Bureau of Indian Standards. He's a member of Delhi University Academics, member of the Academic Council. And one more thing which I'd like to mention is that he's also a member of United Nations Conference of the Trade and Development, UNCTAD. Well, I'm not too sure, but perhaps he's the first one to chair this. Am I right, Dr. Saib? Please correct me if I'm mistaken. Maybe he's the first one to chair this very honorable post. India's implementation committee and CI, he's member of the CI National Financial Reporting Committee, representing India at the following international forums, and those are the World Accounting Forum Dubai, World Standard Setters in London, IFASS meeting London, Issb Nepal, Ministry of Finance Bhutan, SAFA conferences, Asian Institute of Technology, and Emerging Economic Groups China. And then he is a founder and the chairman of the Sustainability Reporting Standard of SRSB of ICI, release many books, and also release standards on the assurance engagement SAE 3410. Launched the sustainability drive, and he's very much after the, as you can see his zeal, that how he's dedicated for the sustainability drive. And then he's a chairman and vice chairman of other boards of ICI. I'll narrate it very quickly. Development guide on the key performance indicators for the capital market in transactions to safeguard the interests of the head of the joint working group of ICI and SEBI, working on
Vignesh, you can leave it.
Okay.
You can leave it.
All right, sir. And I'm sure it was. In fact, had I seen this, I would requested to extend this program by 10 minutes more.
No, no,
So
no,
now
no.
it's over to you, sir, for the inaugural sessions. Over to you, Dr.
Thank you. Thank you very much, Yagnesh Bhai, for your very kind words. And my heart goes out to you that despite the loss of your mother, you have agreed, to be the anchor for this program. It's a very tough moment for you, and I know you personally. So kudos to the professionalism, and all of us pray to the God that this noble soul of your mother rest in peace.
Thank you,
Uh,
sir.
thank you, uh, thank you to XBRL India for organizing this program. My esteemed speakers and the directors of XBRL India, on behalf of the XBRL India, ICI, and as a director of XBRL India, I extend a very warm welcome to all of you to the webinar on digital sustainability reporting. How important sustainability is, ICI realized quite a few years ago and formed the Sustainability Reporting Standard Board, the only second institution in the world. And we have achieved a lot. We came out with Sustainability Reporting Maturity Model 1.0 that was appreciated by IFAC and hosted on their website. And last week, we released version 2.0 as well for BRSR. The social stock exchange that Yagnesh Bhai was mentioning, it has already come now. On 25th of July 2022, SEBI has notified amendment in the ICDR regulations, and social stock exchange is a reality. ICI has also formed an SRO, self-regulatory organization for social stock exchange. The first one, again. And last week, we have issued the exposure draft for world's first assurance standard on sustainability. Even IAASB does not have a standard on on the assurance of sustainability. I believe the bandwidth from my side is low, so I'm switching off the video. So again, ICI is the first one in the world to come out with a draft of an assurance standard on ESG information, and IAASB is in touch with us now, saying that how we have gone about the standard, and we would like to learn from it to develop a standard at the end of the IAASB. Friends, XBRL India is a Section 8 company formed by ICI to promote and encourage the adoption of XBRL. And XBRL is so powerful if it is used properly. If the data is made available to the analysts, to the regulators, then a lot of information can be driven out of it. And when sustainability becomes mandatory in India for this year in the form of BRSR for top 1,000 listed companies, it is very important to have an XBRL enabled reporting for BRSR and the interpretation, interpolation, and analysis of this data, so that the data can be aggregated, can be segregated, can be bifurcated in any manner whatsoever in which the government, other regulators, and the analysts and the researchers want. A lot of research is required in this field, and digitization of sustainability reporting will certainly help it. So XBRL is going to make it happen. Sustainability, as we know, is the ability to sustain. And every year by 15th of August, we consume the annual resources of our Mother Earth. So in 7.5 months, we are consuming annual resources, which means we are borrowing from next year and we are borrowing from next generation. This cannot happen. And India has to lead by example, because Indians have always believed in saving for the future. And I'm sure India will show the path to the rest of the world in this direction as well. So it is very, very imperative. And this program, which is organized today, will act as a starter in this direction as far as the digitization of sustainability reporting is concerned. IASB has also issued 2 standards on sustainability. ICI has also given comments. I believe that the standard have to be more in substance rather than in form, because these are very, very, very detailed standards. And the real intention, real purpose of sustainability reporting may be lost in such detailed standards. As in IFRS, we know that there are over 3,000 disclosures, more than 3,000 disclosures. Same thing should not happen to sustainability reporting. Otherwise, the very objective of having sustainability standard will be lost. In India, we are working towards developing more easier disclosure norms, which will actually help the cause. And BRSR is a step in the direction. And I think more steps are needed to integrate, to do a real integration of the financial statement, having sustainability reporting as well. We should have only one statement which contains financial as well as non-financial. So I'm quite hopeful, quite optimistic, and at ICI we are working in that direction to see that it sees the light of the day, that we have a real combined and integrated financial as well as non-financial statements in an easy to understand language, because the ultimate objective is that we are able to build a healthier, happier, and safer planet. Friends, with this, I hand over the charge back to Sri Yagnesh Desai, who is the moderator, as usual, for the Accounting Standard Board and for XBRL. A very warm welcome to everyone once again.
Thank you, Dr. Sanjeevji. And now we have the next speaker, which we are well conversant with, and she is Revathi Ramanji and she is working at XBRL, manages the development of the guidance of resources aimed at reporting the supply chain. She also supports XBRL internationals and other operations and initiatives. She has more than a decade of experience working on XBRL projects, designing and developing XBRL taxonomies and implementing XBRL reporting platforms for the regulators worldwide. Revati holds a degree in business analytics and management and accountancy and commerce. So today she is going to speak on the digital reporting of sustainability disclosures, international trends and developments. We all know that typically the company report give the reports on the sustainability on the PDF format. Instead of that, now the trend is that even XBRL should also be introduced for the digital reporting for the sustainability reporting, and this will make the downstreaming very easy for the regulators, for the analysts, and all these. So she is going to tell us that in India, how and when it is going to be introduced, the XBRL for the sustainability reporting disclosure, and also apprise us with the international trends and developments. So I welcome Ms. Revathi Raman to dwell upon this. Welcome, Revathi ji. Namaskar ji.
Thank you, Igneshi. Thank you for that introduction. And good morning, all. I'm Revathi Ramanan. Let me share this screen. Not my presentation. Okay. Let me know if you can see my deck.
Yes, yes, ma'am. Yes, ma'am.
Okay. So as India is gearing up for more formal sustainability reporting, I think this is a good juncture to understand what other countries are doing in this space, and also the digitalization aspect of ESG reporting. Okay, now I realize that I'll use sustainability reporting and ESG reporting kind of interchangeably throughout the presentation. So that is what we are going to see in this recap of how sustainability reporting has evolved, the global trends, and the digitalization aspect of that. Okay, so first, some introduction. XBRL International develops and manages the Open Data Exchange Standard XBRL. It is a not-for-profit consortium. The standard is freely licensed. It operates in public interest purpose of improving business reporting. XBRL as a standard is a flexible framework. It can be adopted to different kinds of reporting. Now, let me give you an analogy to explain this. So at the top of the pyramid, you have the technical specifications and best practices issued by XBRL International. Now, these are nothing but alphabet and grammar of the language. Then we come to regulators and standard setters in the middle, who define their reporting requirements in a dictionary. So they use the alphabet and the grammar of the language to define that a dictionary. So for example, ICAI has developed taxonomy for MCA to collect annual reporting data. So that's the dictionary. And at the bottom of the pyramid, you have reporting entities. So they prepare the reports using the words from the dictionary, and also their report has to comply to the grammar of the language. So this is the basic construct if someone wants to understand XBRL. The dictionary itself and the report both are digital, which means it powers analysis. The data can be analyzed much quickly. The data is discoverable. It is actionable, and all of that. I will dwell into that. Okay, so that's a setup for understanding XBRL. There are more than 200 plus implementations across the globe, most of which has been for collecting financial data or risk reporting data by central banks. Now we are starting to see sustainability reporting, making it mark in this map. Okay, so what is the big picture about sustainability reporting? So there are governments, policymakers who are looking at almost every aspect to control emissions, climate change. So one of the measures is disclosures. Through disclosures, they want to understand what the corporates are doing, what are their measures. The other stakeholder is our investors. They are more focused on financial risk and opportunities the sustainability challenges present. And then there are consumers, customers who are looking at socially, I should say, socially conscious customers who are looking at the practices adopted by the companies. So all of these demands from the stakeholders are driving the need for sustainability reporting. Now we understand that we do need sustainability reporting to manage the larger picture or to address the larger picture. So what has to be reported in that? What has to be reported is answered by ESG frameworks and standards. So now there have been ESG frameworks and standards which have been developed for more than 20 years, much before that became a buzzword. So we have we had climate disclosure standards boards, the GRI, SASB, TCFD. These were all voluntary frameworks, mostly privately funded, and they differed quite in their approach and scope, which means we have this alphabet soup kind of a situation where you have a lot of these acronyms addressing in the same space. But towards the end of 2018 is where we started seeing some initial attempts to rationalize the standards at global level. Now, this is one perspective. If we see ESG reporting, the disclosures about business activities are very complex, and it necessarily does not have the same level of control review like the financial data. Adding to it, the voluntary arrangements and the alphabet soup situation makes sustainability data kind of not reliable, and there also been cases of greenwashing where the voluntary disclosures are misleading, which is the cause of concern. So in addition to this voluntary corporate disclosures, ESG corporate disclosures, we have rating agencies that have developed their own mechanisms to collect ESG metrics through surveys and undisclosed mechanism. And the ratings that they've arrived at kind of vastly differ if we compare for the same company across agencies. Now, this is challenging. This adds to the challenge. So there's a clear need to have a more formal efforts in standard setting and regulation backed reporting requirements, where when you bring in regulation, it becomes much more serious, and companies take it more seriously formally, and it's an approach or a mechanism where you can limit greenwashing, or you can control that. So that is the trend that we are seeing now, where we are seeing more formalized standard setting efforts and regulatory based announcements. So moving on to global trends, what the globe is doing in this space. So first we have the International Sustainability Standards Board under IFRS. They've consolidated with the Climate Disclosure Standards Boards and the Value Research Foundation, which was earlier the SASB and International Integrated Reporting Council. So ISSB aims to develop standards which are comprehensive global baseline for other sustainability reporting. So they are fundamental blocks for sustainability standards. Like Sanjeev said in the earlier session, they they've released their preliminary standards S1 and S2. Their consultation has just been concluded, and there's also a draft taxonomy that they have released, which is out for consultation. I think Vivek and Madhu are here to talk more about that in the later session. So that's that's a big picture as far as global standard setting or rationalization of standard setting is concerned. Then we move on to Europe. The European Commission in April 2021 had adopted a proposal for corporate sustainability reporting directive, whereby from January 2024, all large companies and listed companies in Europe will have to disclose sustainability reporting. Now, the EFRAG has published standards for this regulation. They've also done a consultation and released a very early version of how their taxonomy is going to look. So that's what Europe is doing. Moving on to US, the US Security Exchange Commission have proposed rule-based rules to enhance their climate disclosure. Now there's a catch, as in there's a legal battle as to whether SEC has powers to propose new rules. Now let's keep this aside, but that's something for us to wait and watch. But they've also done a consultation which recently concluded. They proposed the disclosures to be in line XBRL. So I see a trend here. We have formal regulation, standard setting, and everyone is looking at digital aspect. They're thinking digital from the outset. So Japan has, like in India, Japan has a sustainability standards boards of their accounting standards firm. They've introduced corporate governance code, which is still not legally binding, but they're thinking about making it mandatory. So likewise, you'll have different ESG news across the globe. Each country trying to bring in more formal efforts, more regulation-based reporting requirements, which is encouraging to see. Now, coming back to India, we have the BRSR, or the Business Responsibility and Sustainability report by SEBI, which has replaced the existing BRR, which was limited in scope, as I understand. So BRSR is going to be mandatory from next year for top 1,000 listed company, but it can be voluntarily filed for the current year. Taxonomies are available on BSE, NSE. What I also understand is, BSE, NSE have, are ready to accept BRSR in XBRL. So this report is going to be collected both in XBRL and PDF. So I'll urge companies who would be required to submit it from next year to use this as a dry run to create this report, see how it looks in XBRL, and before the mandate hits, you can try how it is going to be. Sorry. Okay, so now these were all kind of mandates, regulation-based mandates. Now let's see what the digitalization aspect of this, the topic of this session. Now, sustainability report has to be digital. The benefits of going digital cannot be overstated. It makes analysis more efficient. The data is discoverable, actionable. So let me give you an example. So a regulator collecting sustainability report. So he wants to see aggregate emission data, or he wants to see outliers for any metrics. It can be easily done without without the regulator requiring to rekeying the data from PDF or any other source, or relying on a third party for data feeds. Now, all of this would be based on what the company is going to submit. So it is the source is more reliable. What the company has disclosed in a digital format, that is what is going to be used for decision making. And I feel digital sustainability reporting has to leapfrog the paper and the PDF approach that financial data had followed. And it is encouraging to see that the global developments in this area, standard setters, regulators, they are adopting this digital first approach, which means they want to collect data in digitally even in the first year. They're parallelly developing the the standards as well as the taxonomy to support that. Okay. So XBRL is well suited for digital reporting. Now, with XBRL, you will get cleaner data definitions. You can attach a lot of metadata to the reporting requirements. You can define quality rules in the taxonomy, which means that the data that a collector will get, a regulator will get, has passed those quality thresholds. XBRL is tried and tested for different regulatory and supervisory data collection. So we can very well say that it would sorry. It would suit sustainability reporting very well. But having said that, the standards, there are tweaks to be made in the standards, there are best practices to be released. For example, in financial data, most of the monetary or numerical data is represented in some currency. But in say in ESG reports, you'll have emission data which is to be reported in carbon equivalent. So the standard, we've added that to the standard. And there's a digital special interest group that XII has been operating since December, where the group is identifying potential challenges and questions that will come when you want to digitalize sustainability reporting. And we're also agreeing on initial best practices to be followed in this space. Okay, so now that was all of the talk. Let me show you an actual digital disclosure report, ESG report. So this was a waiver. They had submitted this report to the UK regulator, where it is required to report streamlined energy and carbon data. Let me open this report. So what you see is a regular looking annual report, a nicely glossy report. This also has XBRL tags embedded in that, what we call as inline XBRL, a version of XBRL, where the same document is both the human readable version and machine readable version. So let me go here. So here you see carbon data and energy data. So you have emissions data, scope 1, scope 2, scope 3. So each of these numbers are tagged with an element or concept from the taxonomy. So the regulator has defined tags to for all this emission data. And when I click on that, I understand that this number is tagged with a lot of metadata, which is helpful in my analysis. So when I click on this number, I know that this belongs to, this is emissions direct for offshore. Then this is reported for this period. Then this is the entity which has reported that. Okay, the concept and the taxonomy or the dictionary from which this concept is picked. So likewise, you see all the numbers in this data is tagged. So when it is tagged, machine understands the context of that data and can do a quicker analysis. Let me show that in a moment. you will also see narrative blocks that are tagged. So with XBRL, you can also tag narrative blocks. So what is this narrative blocks? It is description of methodologies used to calculate data. So it is not just restricted to numbers, but you can also tag textual blocks. Now, this looks pretty, for anyone who wants to see the report, they can browse this. But what if I want to do an automated analysis? The tag data, it can be extracted and processed in business intelligence to derive a lot of dashboards. So let me show you an example of how a dashboard could look. So the same report that I had shown you, the tag data is extracted to put a dashboard like this. So you have emissions, you have the breakup of emissions compared for two periods. Then you have this employee pay profile, whatever they have tagged. You could do a dashboard like this, which can be much more insightful and can help in decision making. Now, this dashboard, of course, looks very, very simple. You can expand this to add more companies, more periods. So you have a richer data source to take decisions. This is simple, like I said. This is a trivial example, but I think you get the idea that from the tag data you can have insightful analytics and decision making. Yeah. Okay, then what do I have next? All of this looks very exciting, isn't it? Regulation, a lot of regulation-backed reporting requirements, ESG reporting requirements, the possibility that digital data offers us. But one point of caution that I want to say is, how do we want to collaborate with all this, different standards in different countries that are evolving. We don't want to repeat what has happened with accounting standards, where every country had their own gap, and there was then a requirement felt to kind of consolidate that, then converge into one standard, or we still doing that. With sustainability reporting, now we have this opportunity to collaborate at the outset and set a global baseline from where every country can extend to cover their reporting requirements. So the key what I'm trying to say is, we need consistency, comparability, and utility, because in spite, after all these efforts, we don't want the companies, the global companies in India to say that they need to prepare a BRSR report for India, and they need to prepare say an ISSB report to be filed in some other country. So and we also want to compare with the performance of companies outside India. So in this space, we need to think consistency, comparability, and utility of this data. I think I come to the conclusion slide. So this could be takeaway for professionals in the ESG space. Think digital when you are preparing your ESG report. Think also about the internal processes that will help digital process creation. So you can have the same amount of control and review that you have in your PDF publication to the digital version as well. And ESG reporting is here to stay. See that how your internal processes can be scaled, so that if the scope of reporting increases, you can collect more data easily, with that process, a future proof process. Follow IFRS development, so you stay updated with the global trends. And there's also a lot of design incentive in this. It is not just reporting. It is, your vendors are going to ask for ESG performance, and they banks who would be asking for your ESG performance. So it is not just reporting for the mandate, but I think the utility of ESG reporting is going to increase. Okay, I'll come to, I think there's one mandatory slide. This the information in this presentation and the opinions that I made in this session are all mine and does not represent that of XBRL International or any of its board. So that's a mandatory slide, I have to say. And then open for questions. Yagnesh, do we take questions now or
We'll take the question at the end of all the
Okay,
sessions.
okay, okay.
But I must say, Revati ji, in just about half an hour, in a very impeccable manner, you apprised us and you enriched us with the all knowledge about the XBRL in the sustainability reporting. And the very interesting part was the combo reporting. I call it combo reporting along with the XBRL tags
Yeah.
data and
Yes.
tag data, the you convert into the analytical procedure and all this. I just asked one question,
Yeah.
maybe at the cost of sounding stupid, that the dashboard comes along with the XBRL package or something like that, because I'm getting few messages from my friends. Yagnesh ji, please ask this to Revati ji. The
Okay.
dashboard is
No,
something
it
like
is.
add-on tool or what?
No, it is not part of XBRL, but the data that you extract from XBRL can be put into any BI tool. Like here I've used Tableau, so you can even put it in Excel and do this graphs, or you can have that data in Power BI and do this graph. But the power of XBRL is the data can be extracted and put into these platforms without much intervention, technical intervention, I should say.
That's great. That's great. And thank you once again from on behalf of all of us for enriching with the XBRL knowledge. And now we are going to
Thank
have
you.
the
Thank you.
next speaker. We're going to have the next speaker in Mr. Raj Malik, and Raj is heading India's largest corporate, that's the Reliance Group, Reliance Industries, Reliance Group. And Raj, I think I can call you. I take a liberty to call you by Raj. Okay, Raj Malik is a chartered accountant, cost management accountant, and a pass out from the Stanford University emerging CFO program. And he's got a 22 years experience, wide experience in the strategic financial planning, gap index mergers and acquisitions, and he's managing about 500 plus entities, including flagship Reliance Industries, the largest company in India, and with top 100 Fortune companies, and managing the entire gamut of business transformation, SAP implementation, cost planning, and etc. He is a member of the Accounting Standard Board for financial year 2021 and Sustainability Committee of ICSA 21-22. Presently nominated members of the Accounts and Audit Tax Committee, Bombay Chambers of Commerce, members of Accounts and Auditing Committee, Mumbai Chartered Accountant Society, and has been an ex-member of Indies Committee. He has a wide practical knowledge also, and if I'm not mistaken, Mr. Raj is going to dwell upon on the BIR and BRSR, reporting the latest development and the various disclosure, and also I gather that he's going to talk on the challenges to be faced by the corporates for the sustainability reporting and more so in the XBRL. So it's over to you, Raj, now. So please, Raj, you dwell upon the BRSR disclosures for the listed companies in India. Over to you,
Thank you,
Raj.
thank you, Yagnesh ji, for such an introduction. It's absolutely an honor to be introduced by you.
No
Thank you, Chairman sir, and thank you, ICAI, for inviting me for the presentations, and thank you all the participants who have come and joined this session. So I hope my presentation is visible. So,
Yes,
so I think
it's visible.
Thank you, sir. So I will start with, I'll take a cue from what Revati ji said. I mean, he in the start of the presentation said, I will use sustainability and ESG interchangeably. So in this slide, you can see many terms: sustainability, green economy, sustainable development, regenerative economy, environmentalism, circular economy, corporate social investment, ESG, that is environment, social governance, environment, health, safety, circularity, and many others. So trust me, although there are so many terms, the intent of all these terms are almost same. I mean, they want to direct you in the same direction. That is making the world a better place for the next generation. Interestingly, I was speaking to head of one of the most popular important regulatory framework of sustainability, and she was telling me, during my entire lifetime, Raj, I have used the word sustainability, and now suddenly ESG is being used. So ESG is a term I believe it is being used by the analyst because it is easy to be understood. ESG actually stands for three letters: E, S, and G, and E stands for environment, S for social, and G for governance. In environment, you have a lot of the aspects that you cover are water use, whether you are taking your own water, what are the source of water, you are recycling, resource and biodiversity, what are the resource you use, because minimum resource and maximum output, that is what the aim that we have now. Are you spoiling the biodiversity or are you increasing the biodiversity? Waste generation, how you are treating your waste. We know that, we have read newspaper that Ganga and Yamuna has been polluted because of industries putting waste in them. So are you treating your waste? What kind of waste you are generating? Are you recycling them? That is very important. 4 R's: reuse, recycle, and all these 4 R's are very, very important terms in sustainability. Energy emissions. You know what is the energy you are consuming, but do you record for emissions? Okay, I will discuss in details on that. Social and employee management, how you take care of employees, their health, society, community, etc. And governance. In India, we speak of governance with board composition, board independence, how does the board monitor functioning of the board, etc. So this is a easy to use term, so it is more used these days. That is E, S, and G, that is sustainability. But one thing that everyone makes a mistake whenever they use the term sustainability, they only speak of the emission aspect, the natural capital aspect, but actually there is a social capital also and the governance also, which is equally important. We should not forget that. Now, one more important question: why this sustainability is becoming very, very important? I mean, it could have been important 20 years back. Why now? Why everyone, everywhere, you speak of sustainability? It is so important that if you open up Times of India, every day there is a one page dedicated to sustainability. Some article is sustainability. You newspaper, magazines, everyone is speaking of sustainability. I'll give you one simple answer. If you do a random survey to all the CFOs of large corporates in India, and you ask them what is the question that plagues them most, they will speak in investor analyst or so-called, they will speak the sustainability. If you tell them in their planning of future, what is the thing that keeping in mind on raising of funds, they will say sustainability, because we understand that green finance will be available and will be considerably cheaper than other finance. So everyone will rush towards green finance. And for that, to secure that, you need to be sustainable. I attend almost 1 or 2 analyst presentation, analyst query, rating agency query every month. And the pointed question they ask, I'm telling you, it is a serious business today. You take the case of Larry Fink, the CEO of BlackRock. He writes a letter for last 8 or 10 years to all the CEOs of the company. And the last letter he has written is very clear. It's a challenge and an opportunity. Either you do it, you survive, or you die. I mean, he has made a threatening, is given indirect threatening to the CFOs and the leadership team of the corporates. Business reputation. A lot of business reputation, we all know, is building of sustainability. When this sustainability 5 years back, we thought, 3 years back, we thought that we will restrict the increase in temperature within 1.5 degree centigrade from the prehistoric period. But I think that's gone. It were already crossed 1.4. So people are telling 1.5 is done with. So now the target is maybe 1.7, 1.8, something around 1.7, 1.8. So it's serious, because it's our responsibility to hand over this planet to our generations to come. So one thing that Brsr has done, one very helpful to the CFOs, is that previously they used to think that which framework to be followed. There are so many frameworks: SASB, GRI, GR, CDP, and so on. Okay. Now, since you have framework in India, the corporates will be mandated to follow that framework. I think that at least is a great help. Now, what is the background of Brsr? I have tried to explain the necessity of Brsr, but what is the background? We had a report called BRR from, I think, July 2011. Okay. The Ministry of Corporate Affairs for the first time has introduced NVGs, that is National Voluntary Guidelines, which focused in the principles of social, environment, and economic responsibilities of business. In 2012, it was mandated for top 100 listed companies. In 2015, it went to 500 top listed companies. And by 2019, it was 1,000 top listed companies who are mandated to report BRR. So you go to any big company, any leading corporate of India, in their website, you will find a BRR. But then why BRSR? BRR has less of quantitative data, is verbose, is your aspiration, is your dreams, what you are doing, but BRSR is very different. Before that, let me explain you that why we need to have BRSR. First of all, I've explained you of the National Voluntary Guidelines. They are amended, and the new name for those are National Guidelines on Responsibility Business Conduct, that is NGRBCs. But trust me, I will show you the difference. NVGs and NGRBCs, there are no major changes actually. Yes, there are some improvements, some additions, but no major changes. Okay. So as you know, as we have been told, that from this current financial year 22-23, BRSR is mandatory for top 1,000 listed entities. For the previous year 21-22, it was voluntary. And I understand more than 200 entities have voluntarily reported BRSR last year itself. Lot of entities like Reliance Industries, if you see the annual report, you will see it is much more thicker than the previous year, because lot of data which you are required to report in BRSR has been included as part of the annual report, as we are reporting an integrated annual report. So the corporate India has taken it up. They are mandated to take up, they are forced to take up, because I have told you those things that drives the movement of sustainability for the corporate India. Okay, these are the 9 NGRBCs. I mean, the words or the phrases that is highlighted with blue are added from National Voluntary Guidelines to NGRBCs. So first, so these are 9 principles, and if you happen to see the BRSR, you will see the reporting is based on 9 principles. So there are 9 separate sections, and each section, each reporting, each formats there are for each principles. So first principle: integrity, ethics, transparency, accountability. Okay, so here you have to see whether you are doing business in an integrity manner, with the integrity, where there are ethics, where is transparency, whether we are accountable to all the stakeholders. Safe and sustainable goods and services. The goods and services that we're producing, are they safe and sustainable? That is the second principle. Third is well-being of employees. Here basically in the principle, you can see what you're doing for the employees, how much training you are given, whether you are giving fair salary to the employees, the ratio of salary between the leadership team and the other employees. Are you taking care of only your employees, or the employees of contractual employees, or you are taking care of supply chain also? So that is very important, because sustainability is all about walking the path together. If you walk alone, you will not reach anywhere. The earth will not get benefited. If we walk together, holding hands, that is the sure shot formula of saving this earth. 4 is respective and responsiveness to all stakeholders. So you have so many stakeholders. Are you showing enough respect, or are you responsive to them? Principle 5, you respect and promote human rights. Principle 6, very, very important: respect, protect, and restore environment. This is actually on the central principle. So a lot of people feel sustainability is all about water, air, and emissions. This principle actually speaks of the requirement that we need to disclose in terms of water, air, and emissions. I will show in details. Responsible and transparent policy advocacy. Number 8, promote inclusive growth and equitable development. Number 9, provide value to consumer responsibly. So these are the 9 principles. BRSR is all about 9 principles. There are 9 different sections. There are various formats in which you need to report in each of the 9 principles. This is a table. So this table gives the overall view. You can see the first column is of BRR. So total number of disclosures that we require to give, because BRR also is based on 9 principles. Total number of disclosures that you require to give was 28. In BRSR, the total number of disclosures you require to give is 112. So increase in disclosure is 84. So that is around 400% increase of disclosures. So you can now understand what is the difference between BRR and BRSR. And when I'm discussing few principles to you, you will understand even more than that. So BRSR, if you see in each of the principles, the formats that are given can be classified under two separate heads, essential and leadership. Essential means if you are reporting BRSR, mandatorily you have to report the formats which are under essential category. Leadership category is for those entities which have achieved the state of maturity, which have attained a state of maturity. So if you feel you not attend, so it is optional to you. You might leave it for next year to comply with. Current year you may choose to drop it out and you can skip it. But for essential indicators, you have to report compulsorily. Okay. Now, I have all the slides. I will like to take the principle 5 specifically because it will give 6 principle specifically. It will give ample challenges. Principle 6. So principle 6 is about nature, natural capital. There are 3 broad aspects. One is emissions, one is water, one is air. Let us see what are the various type of questions. So they will ask for energy consumption. So if you typically go to any industry, any manufacturing industry, they will consume energy, either in process or manufacture of utility. Energy multiple. I mean, you will not find a single industry which will consume only one type of energy. They will consume fuel oil, they will consume naphtha, they will consume gas, they will consume electricity, they will consume a host of things. So you have to report the energy consumption. So I think I know the reaction. It is very simple. It is there in the annual report. It is there in all kinds of reports. What is so difficult about it? Fantastic. Actually, it's not difficult. It is available. Next, I'll come to water withdrawal. Okay, water. Now, every industry, lot of industry actually reports what is the quantum of water that is withdrawn or used. But now here the challenge is you have to give water by source. So whether it is from river water, whether it is from well water, whether it is from groundwater, whether it is harvesting of water, rainwater, are you recycling water? All these questions are there. And not only answers you are required to give, you have to give with numbers and figures. Air emission, SOx, NOx, PM, VOC, etc. So you have to specifically state what is your nitrous oxide, sulfur oxide, PM, and VOC emissions. Okay, that you need to state. Okay. Then I come to GHG emission. GHG is greenhouse gases. So how do greenhouse gas generate? Once you burn your energy, once you consume energy, GHG emission generates, right? Emissions happens. So now the question is, you go to any company, does they have a GHG emission recorded in any system? It is not in SAP, not in ERP. It is nowhere. So how is recorded? I can tell you from my experience. You go to any company, it will be recorded in some worksheet. In some plant, some people will maintain a worksheet, and there is no direct system of doing it. I mean, based on energy consumption, you have some standard which you will use. You will convert it to GHG emissions, and you will get the emission figure. So a plant, a company which is say 10 or 20 locations of manufacturing, there are several people who will maintain that. Then someone will accumulate that. So there is a chance of huge mistake creeping in. I mean, it is obvious. The Excel sheet will be in corner of some laptop. Someday you will have it, some will not have it. So there is a big challenge. Waste generated, okay, by type. So is it? Are you recycling it? Are you reusing it, etc.? Or are you disposing it? So, and if you dispose, what is the quantum of disposed waste? Whether it is recycled and then disposed, or etc. Or you putting in the landfill. So these are the very important questions. So waste generated, I think it is there in the ERP. ERP will record waste generated, but what is done after that, and what is the various treatment of waste? I think none of the financial system, none of the ERP, we will record that. So again, this is a challenge to the various corporates. Environmental complications, what you are doing, external audit, mandatory data, PAT targets, etc. are also there. Now I'll come to the voluntary or leadership indicators. Okay, these are voluntary. Energy consumed for renewable, non-renewable. So in the mandatory category, you have to do energy consumptions. Here you have to give data, but again you have to classify it whether it's renewable or non-renewable. Water discharge by destination, water withdrawal, consumption, discharge areas, etc. Scope 3. I mean, let me tell you, if you are not aware of what is scope 1, scope 2, scope 3. So if you're running a manufacturing plant, while processing the products, the energy that you consumed and the emission generate out of that, it is scope 1. If you are using utility like fuel, like electricity, steam, power, raw water, cooling water, DM water, demineralized water, etc. So you will be consuming this utility in manufacturing process. But while generation of the utility, you are generating emission, you will. So that is scope 2. And scope 3 is the most dangerous. Suppose you are a refining company, and so you, while manufacturing crude to petrol, diesel, etc., whatever emission comes from scope 1, whatever power, steam, utility you are consuming, and while generating those to the scope 2, but your product, that is petrol, diesel, when used by some other user, buyer, will use your product, buy your product and use it, what is the emission generated out of that? That is scope 3. So here the principle is, you not only take the emissions that you are generating while manufacturing, but if your product is something that which being used by others will generate emission in future, that also is on your account, is on your shoulder. You have to take care of that. That is scope 3. So scope 3 this year has been made under voluntary category, so you need not disclose scope 3 if you don't want to, but scope 1, scope 2 is on the mandatory category. It you have to disclose here. Innovative technologies to reduce environment. Do you have use any innovative technology? If yes, you have to say again, but it's a voluntary. Business continuity disaster management plan. If you have, you need to say, but it's it is a voluntary. Adverse impact and mitigation along with value chain. It is voluntary. And environment assessment and value chain further. So assessment of environment is very, very important. I think a lot of companies do. If you go to RI's annual report, you will find in one case we have done a environment assessment and we have shown that we have gone to area and we have worked for last 10 years and what difference we have made in the crop pattern, in the life of the people, in the crop pattern and in the life of the people inhabiting in that area. So very briefly, the energy, water, air, I think I have told you. But now, since paucity of time, I will not go to the other 8 principles, and even this principle I have dealt it very briefly. But what I want to tell you is, what I want to highlight is that Brsr is something that is like a dragon. It has just come into the corporates, and corporates have to take it seriously, because otherwise they will lose out. So corporate is taking it seriously. But doing Brsr, I mean, I assume a lot of you are from corporates, is not an easy thing. It's a challenge. You need to, this data, there's a mammoth amount of data to be given. And this data, for reporting this data, you need to have a system backup. Without a system backup, without a software, it is very difficult to have correct data reported. You will falter. I can tell you from my experience. I work for the largest corporate of India. We have a very high degree of digitization in our company. We have a lot of resources, and we have prepared the Brsr for last year 21-22, but we have not reported it. Okay, we have used some of the data and reported an annual report, but entire Brsr we have prepared actually as the backup exercise. And I know the pain of collecting the data. And unless you have proper systems in place, you do not have. So you will not be able. You will make a mistake. I have seen many programs. I have seen many companies who prepare software. I have seen their database which will act as a layer in your ERP, will extract data, etc., etc. And trust me, I have not found a single of those products suitable for company like Reliance, because it's a huge company. So we have to go, and we are doing it internally. We are trying to build something. So I mean, this challenge, this bridge, every corporate has to face, whether it is a small, medium, or large entities. Secondly is, do you feel that this in any corporate will go ahead reporting such amount of data without assurance? So assurance is very important. The Institute of Chartered Accountants of India is coming out with a assurance standard very soon, and it will help those agencies, who gives assurances, to actually help in giving assurance certificate. If you go to Reliance annual report, you will find the assurance certificate. We take it because whatever data we give, the financial data is assured by the auditors, and the non-financial data, sustainable data, is assured by one of the topmost firms in India. And you can see the assurance certificate and the standard they have used for the assurance certificate. In India, we did not have a standard. It is taken from a standard which is in abroad. But in India, we are soon having a standard, thanks to ICI, thanks to Chairman and thanks to entire Sustainability Committee, where we're pushing it hard and getting it done. So what are the challenges? Very briefly, the challenges. One is maintaining source of data, depository of data. Extracting a data should be done, can be and only be done from system. So maintaining a system of data. Number 2. Number 3 then comes to reporting, as Revati explained that you do it XBRL. So with XBRL, you can slice, dice data, you can build many platforms, you can build many dashboards, you can compare, etc. But before going to XBRL, you should have your system in place to collect the data. And once you have the system, then you have to see that the XBRL talks with your system. In SAP language, we call talk. It talks to your system, means it takes it speaks to and fro with your system, takes data, gives data, and so that the XBRL is automatic generated, and you don't have to make too much effort of duplicate effort again creating the XBRL. And fourth is, I will tell, because since the House of Chartered Accountants, I think extreme privilege to tell you that I have thought and I have now reached to a conclusion that in the leadership team, in the if someone has to take up the mantle of sustainability, who is most suited? Is it director of marketing? Is it the head of operations? Is it the chairman? Oh, of course, the chairman will be involved in everything. But I think the person who should take up this mantle and who is most suited to take up the mantle of sustainability is none other than Chief Financial Officer, that is CFO. Because ultimately, one of his responsibility is to get funds at cheaper rate. And until the company is strong in sustainability, he will not get funds. That is that will come very soon. His responsibility is to actually take care of the analyst and see that the company gets a good rating. And very soon, sustainability will be a determinant whether a company gets a good rating or not. So all chartered accountant friends, please rise to the occasion. This is a huge opportunity for us to make a mark. And I see chartered accountants in future paving the way of sustainability in India. With this, I would like to end. If you have any question, please let me know. I'll happy to answer. I am very regular in LinkedIn. If you want any question, you can post there also. We can interact, because sharing and learning is the two aspects that we need to do to move forward. Thank you, Yagneshji. All to you.
Thank you, Malikji. Really, very splendid presentation and very succinct as well, right? So you apprised us with the all 4 4s and the social goals, and the best thing is that you shared your personal experience about with the Reliance companies, and I know that Reliance is one of the first company to report its annual report, come out with the annual reports. So it's very great. Nice to hear from you. And the best thing is that you are easily approachable whenever we needed. You always said yes to us. Great, Rajji. Great, great. And any question and answer we'll take up at a later stage. And now we have the last session, which will be jointly conducted by Mr. Madhu Matthew and CA Vivek Bed. And they are going to dwell upon the commencement of on the staff paper on the IFRS Sustainability Disclosure Taxonomy. I had spoken to Vivek. Is it about 7 o'clock in the morning in London? Is 7 a.m. around 7 o'clock 5 minutes? Hello, yeah. So Vivek is going to join from London, and he apprised me with one thing, that Ifrs Foundation has come out for the request for the feedback on the sustainability disclosure taxonomy, and the last date of submitting the response is 30th September. So what a timely session by you, Vivek. Vivek Bed is a technical staff with the International Accounting Standard Board, working with the IFRS taxonomy team, and he's the CA and CS both, and also passed the deep IFRS examination from ACCA UK. Prior to joining the ISB back in 2018, Vivek worked at the ICI Delhi for 6.5 years. In his current role, he's involved with the maintenance of the IFRS accounting taxonomy, and he has recently worked on the development of the staff draft on the IFRS sustainability disclosure taxonomy. As I mentioned, he's participating from London, and so let's welcome Vivek and Mr. Madhu with you. So both are going to conduct this program jointly. Vivek, I can see your presentation on this screen.
Yes, so Madhu will start the session. So over to Madhu.
All right. Okay.
All right. Thank you, everyone. Thank you,
Welcome, Madhu. Welcome.
Thank you. And first of all, let me thank you, and thank you to ICAI and XBRL India for organizing this event and welcoming us. I have to say it's an honor and a privilege to be here today. After listening to Revati and Raj, there's a lot of information that's been provided, which is hopefully very, very helpful. It was very insightful for me as well. And if I can just mention one thing before I get started, what Mr. Raj mentioned about capacity building the right processes you need to collect sustainability information is so true. I've been in the field of sustainability reporting for the last 6+ years, and the first thing companies need to do is build that capacity in-house. So very true what Mr. Raj just mentioned. The other thing is the role of CFOs and chartered accountants. That's equally important. And we'll talk about how Ifrs Foundation is thinking about that in a second. So my name is Madhu Matthew. I'm part of the Ifrs Foundation. I will be taking you through the initial parts of the section, and then towards the end, we'll talk about how you can get more involved in what we're doing. Vivek, my colleague here, will talk you through the details of the taxonomy and what some of the architecture design considerations we are taking with the taxonomy. Now, there's a small text here in the slide that says the views expressed in this presentation are those of the presenters, not necessarily those of the Ifrs Foundation, the IASB, and the ISSB. So I just need to say that. And also want to clarify, when we talk about digital reporting, we are referring to digital general purpose financial reporting, which encapsulate both reporting of financial statements and sustainability related financial information. So with that, let's get started. So Vivek, if you move to the next slide. So what are we focusing on today? We want to focus a bit about ISSB, the newly formed International Standard Setting Board, and our approach to standard setting, as well as our approach to digital reporting. So we'll talk about that first. Then we'll get into digital reporting. Why is it important, especially in today's world where it's a lot of data-driven decision-making? So digital reporting, how it's done, what our vision is for that. Then we'll get into some really technical details about the taxonomy, the staff draft taxonomy that we've released. And we'll talk about areas of feedback that we're hoping you will provide. So Vivek will talk you through that. And then I'll come back towards the end where we'll talk about how organizations like ICAI and others can be part of this process and how to get involved and how to provide us feedback so that we can truly build a global baseline when it comes to sustainability reporting. Revati mentioned, Mr. Raj has also mentioned that there are different frameworks, different things in the past. So the exact term was alphabet soup. With Ifrs Foundation, with ISSB, our hope is that we are consolidating a lot of things together to form a global baseline. So it's very important that you're involved and your feedback is very important for us. So we'll talk about how we can get involved. So, and then towards the end, we'll be happy to take your questions. So moving to the next slide, Vivek. Let me start with a little bit about the Ifrs Foundation itself. The Ifrs Foundation was created in 2001 to create globally accepted accounting standards. These are what we call the Ifrs accounting standards that were created. Now they are mandated across 140 global jurisdictions. So it has become kind of a global accounting language. Now, the Ifrs Foundation has a 3-tier governance model. This is very important to note because this kind of gives us the structure, the accountability, and the transparency that is needed to create global standards. So it's a 3-tier governance model. We have 2 boards, the International Accounting Standards Board, the IASB. They create the financial accounting standards. and the newly created International Sustainability Standards Board, ISSB. Now, Revati mentioned earlier on that the ISSB was formed by consolidation of several different standard setters and different framework providers. So I was previously with SASB, so we merged with Ifrs Foundation. Now it's part of ISSB. Similarly, the integrated reporting, CDSB, all of us have come together to kind of create this global baseline going forward. So that is the board side of things. Now the trustees are responsible for strategy and oversight of standard setting boards. And then on top, we have the monitoring board that comprises of capital market authorities that provide public accountability for the whole organization. So the key point I'm trying to make here is this oversight structure and established standard setting due process means that the Ifrs Foundation is best placed to build investor-focused sustainability disclosure standards going forward. So that's our intent, that's our hope, that's our mission going forward. So that's a little bit about the Ifrs Foundation. Now, in the next slide, we'll talk about the ISSB itself. Like I said, this is newly formed, focusing on sustainability. So what exactly does that mean? So we want to develop a global baseline of sustainability disclosure standards. And along with that standard, we want to provide a digital taxonomy so that digital reporting can be thought of from day one. So it's no longer just paper-based. Digital first is the approach that we're taking. And Vivek will actually talk about the details here. And like Revati mentioned, our intent with this digital taxonomy is that the same report that you generate and you provide and you publish becomes both human readable and machine readable. That is the intent. So it is that combined kind of reporting mechanism that we envision going forward. So once a report becomes machine readable, then it is very easy to aggregate, like the analytics platform Revati showed earlier. And then if you're able to extrapolate that and scale it up across multiple companies across the globe, you can quickly realize the potential of using comparable data and making financial decisions very quickly. So that is the key part of it. The other thing that I want to mention is the fact is building blocks approach. We heard this early on in the presentation. Every jurisdiction across the globe will have their own needs, their own circumstances when it comes to standard setting. Our intent with Ifrs Foundation ISSB standards is that we hope to provide this global baseline that is applicable across the globe. And when it comes to jurisdictions like India, we give the flexibility for jurisdictions to add on whatever is needed for local jurisdictional needs. So that's that building block approach we are very much hoping to do. And that is essential for us as a global standard setting organization. And the feedback that you provide us will go a long way in making sure the needs of individual jurisdictions like India are considered and taken forward. So next slide, I'm going to talk about what Ifrs Foundation, what's the benefit we bring to the market. As I said before, the Accounting Standards Board, IASB, has been around for 20 plus years. It's been adopted across 140 global jurisdictions. So that financial accounting is that kind of de facto language that we have. So we have the IFRS accounting taxonomy available. With the newly formed ISSB, we are not starting from scratch. We are not reinventing the wheel. We actually are taking whatever has been done in the past decade by SASB, by CDSB, by TCFD, by Integrated Reporting Council. We've taken all of that and we've come up with our initial exposure draft, which is S1 and S2. And along with that, what we've created is the staff draft taxonomy, which is an early release. And the reason why we're doing an early release is because we take digital reporting very seriously. So we wanted to provide this to the market today so that we can get your feedback. And the intent is we will have both taxonomy, both financial taxonomy and sustainability taxonomy compatible with each other, so that when it comes to investor decision making, you have both financial information and sustainability information together, and investors can make decisions in a more holistic way. How are you managing your finances? And like Mr. Raj earlier said, how are you managing environmental opportunities and risk? How are you managing social risk? All of that gives that holistic, complete picture. So that's what we're hoping to do at the foundation. And now I'm gonna turn it over to Vivek to get more into digital reporting side of things. I think Vivek, you're on mute.
Sorry. So yes, so thanks Madhu, and my name is Vivek, and I'll briefly be talking you through what digital reporting is and why it has become increasingly important in a data-driven world. So to clarify, when we refer to digital reporting, we refer to digital general purpose financial reporting, which includes both reporting of financial statements and the sustainability related financial information. Yes, so financial information is reported and available in various formats. So let's say if we take PDF documents, these are often structured in a manner that is visually and contextually appealing and can be easily read by humans. However, these PDF documents are not machine readable or computer readable, and this makes it difficult to extract and analyze large quantities of data or text across hundreds of entities. While PDF documents may not lend themselves to efficient data analysis, there is still a use case for these reporting formats. For example, let's say in cases where users may want to analyze a single company's financial reports in detail, they may refer the PDF document. So, but when it comes to digital general purpose financial reporting, that is the reporting of financial information in a digital format using XBRL. So which transforms PDF documents into computer readable data, and information in the static PDF document is tagged with pieces of XBRL code maintained in the IFRS Sustainability Disclosure Taxonomy. And this taxonomy is a key tool in facilitating digital reporting, and we'll discuss more on what this taxonomy is in the next slide. So financial information that has been tagged using this structured format lends itself to greater efficiency in analyzing large amounts of data because everything is computer readable. So once financial information has been tagged using items from the taxonomy, this information then becomes computer readable and easily storable on a database, allowing users to query large amount of information from such a database efficiently. And on top of this, the introduction of the inline XBRL format allows the best of both the worlds by providing the visual human readable context of a PDF document along with the computer readable XBRL codes embedded into a single document. So before we talk about the IFRS Sustainability Disclosure Taxonomy, it is important to understand what a taxonomy is in general. So a taxonomy is a system where we classify information into categories or groups and can take a variety of forms. So the IFRS Sustainability Disclosure Taxonomy is not a green taxonomy, but rather a system for classifying and structuring sustainability related financial data points. So the IFRS Sustainability Disclosure Taxonomy contains elements which are specific defined codes representing different reporting concepts and a reference to the specific disclosure requirements into the standards. So where each taxonomy element will be given a name and a description that will match with the corresponding requirement into the standard. So let us see this example here. So this, so preparers of financial reports may refer to their gross scope 1 emissions using different terms or indeed even in different languages. However, it is not clear when looking at these line items that what each company intends to convey. You might be able to get some context if you look at the PDF document as a whole, but this is cumbersome and time consuming to do for hundreds of line items. So now each of these preparers were to tag their financial reporting using elements from the IFRS Sustainability Disclosure Taxonomy. A user of the information, such as an investor, would know that each of these line items from these companies actually mean the same thing, that is, in this case, gross scope 1 greenhouse gas emissions, thus making these line items comparable across entities. The XBRL element acts like a barcode in that it makes the information on the PDF document readable by a computer. The XBRL element, or a tag, we call it tag, so also contains other useful pieces of information about the tagged items in the reports, which the preparer includes when tagging their financial reports. We'll discuss more on how this taxonomy will be developed later on. So why is digital financial reporting so important? So we live in the information age, and increasingly more information is becoming available to investors, including sustainability related financial information. And by digitizing financial reports, information in those reports become machine readable, allowing investors to access and analyze information more efficiently, including information in the foreign languages. So digital financial reporting provides opportunities to improve capital market efficiency and potentially reduce costs of capital, as investors would be able to analyze information and make capital market decisions much quicker. Digital financial reporting can also assist regulators in their market oversight activities and enforcement reviews. And lastly, so 90% of public companies by market capitalization are now required to undertake some form of digital financial reporting. These jurisdictions include the US, the European Union, the UK, India, and the other countries. And while there are challenges in the adoption of digital reporting practices, there is a clear global trend toward facilitating and implementing digital reporting. So now I'll be talking you through the staff draft taxonomy that we published and the related request for feedback before I talk you through the details of the staff draft taxonomy at a later stage. The ISSB plans to facilitate digital consumption of sustainability related financial information from the outset, like from the day one, as Madhu mentioned. So by developing and maintaining a sustainability disclosure taxonomy in conjunction with the development of the sustainability standards. To facilitate digital reporting, we have published a staff draft of a possible taxonomy accompanied by a staff paper outlining fundamental issues that we identified in developing that taxonomy. And at a later date, we'll publish a proposed taxonomy that will be published by the ISSB for public consultation following the Ifrs Foundation's due process. So the ISSB sought feedback on two proposed standards. First is a general requirement standard, IFRS S1, and the climate standard, that is IFRS S2, over a 120 days consultation period that ended on 29th of July. And the two proposed standards received over 1,300 comment letters, which the team at the ISSB are still reviewing or planning to present at the upcoming ISSB meetings. So the draft IFRS S1 sets out the overall requirements for disclosing sustainability related financial information about all sustainability related risks and opportunities to provide the users with a complete set of sustainability related financial disclosures. So these disclosures would be centered on a company's consideration of its, these are called 4 pillars in this standard. So company's consideration of its governance, strategy, risk management, and the metrics and targets. that the company uses to measure, monitor, and manage sustainability-related risks and opportunities. And this approach is consistent with the recommendation of the TCFD, that is Task Force on Climate-Related Financial Disclosures, and it extends them to sustainability-related risks and opportunities beyond those that are related to only climate-related risks and opportunities. And the second draft, that is draft IFRS S2 for climate-related disclosure, sets out the specific requirements to identify, measure, and disclose climate-related financial information. The climate exposure draft is built upon the TCFD recommendations and the Issb climate-related industry-based requirements. When an entity applying IFRS S1 identifies climate-related risks as a matter to report on, IFRS S2 is specified what disclosure should be provided by an entity for those climate-related risks and opportunities. So as a guiding principle in the development of the taxonomy, the draft disclosure requirements formed the basis for development of a draft of a sustainability disclosure taxonomy. So we referred both those drafts and outlined the staff draft of the taxonomy. And the draft IFRS S1 and S2 on the screen included questions to respondents related to the drafting of the exposure draft that would facilitate the development of a taxonomy and digital reporting. For example, it asked the questions to the respondents about any particular disclosure requirements that they think that could be difficult to tag digitally. So we accompanied the staff draft with a request for feedback that outlines key staff recommendations for the development of the taxonomy. So the request for feedback focuses on fundamental matters which need to be considered early to enable the ISSB to publish an IFRS sustainability disclosure taxonomy on a timely basis. So this is the due process. The ISSB intends to adopt the same high quality due process for taxonomy development as the IASB currently follows. New taxonomy content reflecting the new ISSB standards will be developed by the technical staff and will require the approval by the ISSB by means of a ballot to ensure it correctly represents the standards. So we aim to publish a proposed taxonomy soon after the new standards are issued, which will then be subject to the public consultation. And the ISSB will then consider all comments will consider all comments received in that consultation before publishing a final taxonomy. So in May, we published a staff draft of a possible taxonomy based on the IFRS S1 and S2 exposure drafts. We accompanied this taxonomy with a staff request for feedback document where we highlighted and explained the key issues that we are considering at this stage. So we are requesting your feedback on those issues and the illustration of our proposed approach to them in the staff draft taxonomy, along with any other thoughts you might have on the digital reporting of sustainability related financial disclosures. It is important to be clear that this publication was not approved by the ISSB and is not a due process document. It is equally important to be clear that it is not a shortcut or a replacement for any part of due process. In contrast, it's a form of a kind of extra outreach or research in addition to that mandated by the ISSB's due process. So all the steps of that due process will still be followed subsequently. So in the request for feedback document that accompanies the staff draft taxonomy, we highlight 9 big picture questions about how the IFRS sustainability disclosure taxonomy should reflect the IFRS sustainability disclosure standards and how it should be designed to best fit into and support the preparation, dissemination, and use of digital reporting. I'll now briefly cover the detail of the staff request for feedback questioning in the following slides and discuss our recommendations. So the first question that we looked for feedback on how we should prepare and manage the taxonomy representation of the ISSB standards. So we wanted to understand how the basic technical structure of the taxonomy might impact practical use of the taxonomy and the electronic reporting in various jurisdictions. For example, there could be some jurisdictions that have or haven't adopted the IFRS accounting standards, or some jurisdictions that may have or may not have widespread digital financial reporting, or some jurisdictions may or may not be using the IFRS accounting taxonomy for their digital reporting. And then some jurisdictions that will adopt the ISSB new standards as is, or as a foundational baseline for more extensive local requirements. So also, fundamentally, we have two separate boards approving two sets of standards, which make certain arrangements more practical. Taking these factors into account, we illustrated in the staff draft what we think is the crucial first decision to separate the IFRS Sustainability Disclosure Taxonomy from the IFRS Accounting Taxonomy, and package both of these taxonomies separately and package each as an independent component. So as we can see in this diagram, that enables the sustainability disclosure taxonomy to be used together with the IFRS accounting taxonomy, but it can also be used with other accounting taxonomies in those jurisdictions that adopt the ISSB standards, but either don't use the IFRS accounting standards or don't use the IFRS accounting taxonomy. So we also wanted to design the IFRS Sustainability Disclosure Taxonomy so that it could potentially be used as a building block in jurisdictions that go beyond the baseline requirements of the ISSB standards. So jurisdictions could address their additional disclosure requirements through a specific top-up taxonomy, allowing for tagging of those additional requirements, while the foundational parts of the disclosures would still be tagged identically across all jurisdictions and so easily used and compared globally. Taxonomy layout addresses how the items within the IFRS Sustainability Disclosure Taxonomy will be presented to promote ease of navigation and the use of the taxonomy for preparers of digital financial information. Effective grouping of those elements within the taxonomy help preparers navigate, understand, and use the taxonomy, which facilitate efficient digital consumption of the financial information. So these presentation groups are not intended to dictate how preparers should prepare their financial reports, but rather are intended to promote ease of navigation and understandability of the taxonomy, to help people to find the right taxonomy item to use to tag a piece of their report or to find the data they are interested in. So the basic layout of the sustainability related financial information is expected to vary more than the basic layout of financial information, which with different preparers choosing to arrange their reporting along different lines. Because of this, the staff recommended that items within the taxonomy should be grouped into two presentation groups to assist preparers in identifying appropriate items that represents their disclosed information. So the first type of grouping is by standard, where items are grouped based on the draft sustainability disclosure standards. So for example, the IFRS S1 elements will be in one group and IFRS S2 elements will be in another group. And this would be consistent with the grouping of elements in the IFRS accounting taxonomy, in which elements from the standards are organized into the presentation group to which that standard relates. So this presentation grouping would aid preparers who may report their sustainability related financial information as per IFRS sustainability disclosure standard, or simply think about their reporting from that perspective. The second group is by aspect of core content, where the same items are grouped on the basis of four aspects of core content. Four aspects of core content, which are governance, strategy, risk management, and metrics and targets. This grouping would bring together the requirements from all the standards, viewing them instead by these four aspects of core content. So all the elements that are related to governance will be in one presentation group. So all elements from governance from across all the standards will be in one presentation group. So to address this presentation group will address each of the core content aspects in turn. So the staff also recommended a third grouping, that will contain the industry-based metrics, which would not be in the two other groupings organized by industry. So this is expected to reflect reporting practice where these more detailed disclosures are often provided in a distinct section of a report. We worked closely with the SASB team throughout the development of our staff draft taxonomy to ensure that it is fully consistent with the SASB taxonomy. Yes, so investors use narrative information differently than numeric information because, for example, numbers are used to directly compare between companies and periods. Consequently, it is often useful to capture each reported number separately, for example, an entity's profit or loss for the year. And in contrast, narrative information often needs to be read in context and can be less directly comparable than numerical information. Because of this, larger pieces of text covering topics in a consistent way might be more useful than the smallest possible pieces of information. Ultimately, the question is, at what degree of detail should we expect preparers to identify specific items of information within their general purpose financial statements? So ultimately, it's a balancing act in finding the right kind of trade-off between effort required by the preparers to tag their reports and the usefulness of that tagged information to the users of the disclosures. So the items that are too broad in the information they capture lead to less useful pieces of information, whereas items that are too narrow and specific may lead to users needing to query multiple related items to understand the whole context and to find useful information, and that will impose a lot of effort on preparers in tagging their reports by individually tagging the detailed specific information. So our objective was to create distinct items for narrative information when the information is expected to be separately understandable to the users and to be easily identified for tagging. And to meet this objective, what we did was we created elements corresponding to the proposed requirements in each subparagraph of the standards because they typically result in distinct and coherent disclosures. So we did not go beyond the subparagraph level for the narrative information. And we also recommend creating items corresponding to the paragraphs that reflect a whole disclosure objective or a whole core content aspects to capture any kind of remaining information that were not reflected in the specific subparagraphs. So as I noted, this is a balancing act, and we would greatly appreciate your feedback from both preparers and users of sustainability disclosures on whether we are broadly striking the right balance in our proposal. So categorical information. So some narrative disclosures, such as when the disclosure essentially includes a categorical yes or no answer or a choice from a specified list of options, are similar to numerical information in that they are directly comparable between entities and across the periods. If such data are actually provided by preparers in their digital reporting in a categorical format, by which I mean as multiple choice rather than just as text, primary users would be able to quickly search databases for those information and compare across different companies, and as well as for the same company across different periods without needing to interpret the textual disclosures of each entity. Here are some examples of categorical items that we have proposed, including in the taxonomy. So there are Boolean items. Boolean means just categorical items to be used where the answers for tagging are either true or false. There are also enumeration type elements which allow a fixed list of predetermined answers. So in this case, for example, the last element type of risk associated with climate related scenario used. So we have given two options, transition risk and physical risk. So the entity can use one of these two options, or if they want to disclose something else, obviously they can extend these list. So previous SASB taxonomy. So the ISSB has incorporated the climate related disclosure requirements of the SASB standards into the S2 climate related disclosures exposure draft. Industry-based disclosure requirements identify, measure, and disclosure information related to significant climate-related risks and opportunities associated with the particular industries. And in the SASB standards, these industry-based metrics were grouped by sector or by industry and then by disclosure topic. So it was like the categorization was very efficient, and each metric was ascribed a code which linked the sector, the industry, and the disclosure topic to the metric. So around this time last year, so around September 17, SASB published a taxonomy representing the reporting requirements in the SASB standards, and their taxonomy closely followed the layout of the standards. So this structure made the process of searching for the correct item to tag related disclosures efficient and clear for the preparer. So there is strong continuity between the SASB standards and the ISSB's S2 exposure draft. The S2 industry-based requirements are closely derived from the SASB standards and follow exactly the same structure and coding. Given this, the approach we recommend in the staff draft taxonomy was to leverage the work previously done on the SASB taxonomy, which we worked closely with the SASB staff to incorporate into our taxonomy. So this involves using identical names for equivalent items and following a similar presentation of those items in the taxonomy. As we can see, bottom half of the screen. So left hand one was SASB taxonomy, and for the same kind of disclosure requirement, we created similar elements into our IFRS Sustainability Disclosure Standards taxonomy. So we proposed some changes compared to the SASB taxonomy in order to align with the draft IFRS S2 requirements, and these included making some of the metrics more internationally applicable. So next topic is connected information. The general requirements exposure draft requires entities to describe the relationship between different two pieces of information, either within the sustainability disclosures or between sustainability and financial disclosures. For example, where the disclosure of use of scarce natural resources is related to the disclosure of the risk of natural resources shortages and on the potential financial impact in, for example, cost of sales or change in prices. So the staff has not so far recommended any specific method to capture these connections between pieces of information other than simply by the block tagging of that narrative information. So in the request for feedback, we are asking if other more specific or any other digital tools should perhaps be used to improve the digital accessibility of those information that describes the connection between related disclosures. What use might the consumers of sustainability disclosures wish to make of those connections, for example, and what information would need to be captured about them to facilitate those uses? This is again cross-referencing. So again, from general requirements exposure draft, which permits a preparer to include information by way of cross-reference to another report, where this information forms part of the complete set of sustainability related financial disclosures. So that report could be some other report other than the sustainability or financial statements. Could there perhaps be a risk that the information in that other report may not be tagged because that could be outside the regulatory purview, and thus that the digital representation of the sustainability report could be incomplete? Although we considered this topic, but for now the staff recommended that requirements related to cross-references should not be explicitly modeled in the IFRS Sustainability Disclosure Taxonomy, and no suitable taxonomy level modeling approach was identified to address all the concerns that are related to this topic. Instead, we think that this is an area that will depend on how reporting regimes in jurisdictions choose to handle questions about what cross-references are allowed and if and how such reference documents should be submitted as part of digital financial reporting. So as with all of the topics I've mentioned, this is an area where we are looking for your thoughts, opinions, ideas in order to develop an IFRS sustainability disclosure taxonomy, and more generally, a digital financial reporting process for sustainability disclosures that works the best it can for everyone in the process like regulators, preparers, and users of the information alike. So on that note, I'll hand over to Madhu to discuss how you can help shape the IFRS sustainability disclosure taxonomy and the work of the ISSB more generally.
Thank you, Vivek, for the deep dive into our taxonomy and all the different considerations we need to do. Very, very insightful. Thank you again. So let me briefly take you through next steps. Like Vivek mentioned, what we're trying to do is have a digital first future. For that, we need your feedback, your participation, because these are fundamental matters that we're thinking about. How do we design something that is globally applicable, and then jurisdictions across the globe can successfully use it for their purposes? So there are two ways you can participate. You can provide or submit a survey, or you can provide public comments. I think the public comment period ends September 30th. The link to our public comment is on the slide. Please do utilize this opportunity to take part, provide your ideas, especially we want to hear from a market like India, because it is very much part of what we can accomplish together when it comes to a sustainable future. So it's very important that we get your feedback. Again, I want to emphasize the taxonomy that we provided today is considered like an early version. So we are thinking about a good design, a good architecture for the taxonomy. Any feedback that you provide will help us make it more robust, make it strong going forward. As soon as the taxonomy, Vivek, if you go to the next slide, as soon as the ISSB formalizes S1 and S2 in the near future, what we will do is we'll take all the feedback that you provided us on taxonomy. We will use that to release a taxonomy exposure draft. So there will be another round of public consultation before we finalize the taxonomy. The taxonomy is a reflex, it gets finalized, then we'll have the taxonomy closely following that. Again, this is an early release of the taxonomy. We're doing this because we want to be digital first. We want to get your feedback. This is very, very important. Then beyond the taxonomy, this is another thing I want to stress is, chartered accountants, assurance leaders like you, there are other ways you can participate in the process. You can actually participate in the ISSB meetings. Sorry, Vivek, can you go back to the next? Okay. So you can participate in the meeting. There's meetings happening in Frankfurt the week of September 19th. These meetings are published online, so you can observe online. And soon after the meetings are done, around September 26th, you will have meeting summaries published as well. So this is another way you can participate, understand where ISSB is heading. The link to register for these meetings are also provided on the slide. So quickly going on to the next slide, Vivek. So in terms of transparency, we are also providing you an opportunity to participate in prioritizing for future. What do I mean by that? We have what's called a formal agenda setting process. We say, these are the items we are going to look at in the future. These are our priority agenda items, and we publish that. So you have the opportunity to actually provide feedback on that. If you think something else is important, especially for jurisdictions like India, if you think there are other things more important, please provide your feedback so that we can adjust our priorities and take that into account as we set sustainability standards going forward. To me, this is a unique opportunity. There are a lot of environmental, social issues at the moment. Having a global baseline, a global sustainability standard is very important, so that, like Raj and Revati mentioned, how do we make the world a better place for future generation? And that starts with good reporting, comparable information, data-driven decision-making, so that investment decisions are done the right way. So thank you again for inviting us. This has been a great opportunity. I'll turn it back to Yagnesh to take it forward.
Thank you, Madhuji and Vivekji for great information. And now I think we all Indian chartered accountants and the corporates, those who are connected with the financial accounting or the financial fraternity, we must participate and support the International Financial IFRS Foundation and give them the feedback about the XBRL. And we are XBRL is nothing new to us. We have known the importance of XBRL, so we must participate wholeheartedly and support the drive of the IFRS Foundation for the feedback. It's a very important drive. And sir, Madhuji, I like about the Issb meeting. This is for the first time I think we are getting an opportunity to take part in the meeting, and there's a great deal. And I think when we are getting this opportunity, I think we must capitalize, and we feel lucky to have this kind of participation. Thank you very much for highlighting on this. Really appreciate. Uh, we have three questions, but before that, I would like to say something that thank you very much. Thank you, Dr. Sanjeev Singhal from Revati, Raman, and Raj, and Madhu Methuji and Vivek Ved for apprising with us with all developments. It's like attending 1 month in a university. That kind of knowledge you shared with us. Thank you so much once again. Now, can we go to those three questions, please? Hello, am I audible, sir? Am I audible to you?
Yes.
Am I audible? Okay. There are three questions I'll take. One is from Mr. Sachin Shinde from Pune. Please guide on course or recourse related to sustainability in view of helping corporates to report their sustainability. I repeat once again. Please guide on the course or recourses related to sustainability in view of helping the corporates to report their sustainability. So I think he needs some kind of a help in terms of guidance or some type of course. If the other people, the technical team, can allow Mr. Sachin to say something and to have more clarity. Hello, am I audible to you all, please? Hello.
Yes, definitely.
Yes. Yeah.
But I must share something. There are 404 participants till now. 404 participants. And this feedback has come from CA Sonia and CA Vaishali, who has been of immense help in organizing this event. Kudos to them as well. So,
So if I may
clear?
provide an answer, this might not be a perfect answer, but
Still,
I would highly encourage Mr. Shinde to take a look at our website, ifrs.org. We have several educational materials related to the standards, S1 and S2. We also have our website, sasb.org, where we have a lot more information about the industry-specific reporting requirements that SASB standards have proposed.
Matthew, can you repeat the other site, please? Can you repeat the other site? First, you mentioned ifrs.org.
.org, yeah.
Okay.
And the other one is sasb.org.
Okay, thank you.
Both these websites have a lot of information about our standards. You will get implementation guidance, reporting guidance. A lot of information materials are available on our website. In addition to that, what we have is called a credential program called FSA, Fundamentals of Sustainability Accounting. So again, that information is available on sasb.org. So you can take the course. There's a level 1 course and then followed by a level 2 course. I encourage you to take a look and see if it is applicable. But I also want to caveat that with another thing. But with BRSR, I realized that the reporting requirements in India jurisdiction may be different. but I'm not 100% sure which courses I would recommend for that BRSR specific things, but that's helpful.
I'm sure it will have. Mr. Shinde, I'm thinking it's a very great answer, sir. Really. And I like the caveat. I like the caveat about the Indian requirement. Appreciate Mr. Beth. Good. Okay. Second question, Mr. Girish is from Mr. Girish Ulhas again from Pune. Are the ARP companies also gearing to keep up with the jurisdictional and the regulatory expectations? Well, I think in the Indian from the Indian perspective, if you allow me to interrupt, I would say yes. Or if you have to say anything, please go ahead.
So
Vivek ji.
Yeah, let me provide you a quick insight from a technology perspective, because I lead a lot of the technology initiatives for the IFRS. In the past several years, what we're seeing is increasingly software providers are entering the market. Large players like SAP, Oracle, and others are providing sustainability related capabilities in their platform. Along with that, we are seeing a lot of startup companies are also involved in it, and they are increasingly providing easier mechanisms for companies to aggregate the sustainability information so that they can report publicly. So that's my little bit of insight there. I'll turn it over to Revati and Vivek, who might be able to share more.
The insights that we have is more on the XBRL report creation for ESG reporting, which we've seen a kind of constant increase and an attraction where vendors want to integrate with ERPs for automatic creation. Yeah. But
Okay, so can I take the Vivekji would like to say something?
No, I don't have anything to add. So everything is covered.
And Mr. Raj Malik had to attend some other webinar, some other engagement, so he had opted out. And let me see the last question. And this is I being a speaker, I always face this. This is from Anora, a place called Anora, and this is from Divansh Shunia. Divansh Shunia request to email PPTs on the website. She has requested for the PPTs on the websites. So if that is possible, we'll do that. We'll check up with the ICI and the other paper presenters here. Thank you very much. I must say something today. I must share something with you all. Today is the 14th September and that's the Hindi Day. HIND is a Hindi day. तो मैं शुक्रगुजार अदा करता हूँ आप सबका for coming here. That's the correct tribute to the Hindi Day. Thank you all of you once again. And I must appreciate the technical support and the support by CA Sonia and Vishal from the SRLB board. And now we have the vote of thanks from none other than CA Mr. S.N. Gupta, who is a joint director of the Technical Directorate of ICI. Who is the joint director of the technical directorate of the ICI. Namaskar, Gupta sir, आपका स्वागत है.
Sir, namaskar. Thank you very much, sir. And I attended full seminar, webinar. हाँ जी सर, हिंदी में नमस्कार.
हिंदी में बयान करूँगा.
हाँ जी.
नमस्कार. So please now, it's all is yours. All is yours.
Thank you.
हम आतुर हैं आपको सुनने के लिए.
Thank you very much. I attended full webinar. And I can tell you it is very informative, very knowledgeable, and very interesting. First of all, I would like to thank CA Sanjeev Singhal sir, our Central Council member, who is also Director on XBRL, for taking us the inaugural session. I thank you all the galaxy of star speakers, Madam Revati, who has given a very informative session on the international trends and development on digital reporting on sustainability disclosure.
Yes.
Raj Malik ji has enlightened us on disclosure for listed companies. Mr. Matthew and CA Vivek Vaji also have given us the taxonomy perspective of digital sustainability. So all the entire session was so informative, so knowledgeable. It is absolutely my privilege that I have attended this webinar today. I would like to thank Yagnesh sir, you also who offered yourself to be the moderator for the session. I thank you all the star speakers, and I also thank you all the participants who have attended in such a large number. I'm sure this webinar was really very learning experience, and hope everybody would have enjoyed it. Thank you very much.
Thank you all.
Thank you
Thank you,
very much.
everybody. God bless.
Thank you.
Thank you. Thank you for the opportunity.
शुक्रगुजार हैं सबके.
Thank you.
Namaste. Bye-bye.
Thank you.